All right, guys, there's a lot of discussion on what to expect with the market and the forecast as we approach 2022. Now, coming out of this COVID era with tons of US dollars being printed into the economy, stimulus checks, bailouts, mortgage forbearance being really big deals, there's a lot of confusion on what to expect, right? So today is actually a really, really big day. December 14th and 15th, the Federal Reserve, the centralized bank of the United States, has been meeting, coming together, talking about how they can either try to wean off of all this money printing and avoid inflation, right? So there's a lot, just a lot of discussion in the network on what's happening. So we got Michael, my buddy Michael McCown, on board today. This man is a wizard when it comes to investing and just analytical type of strategies when he's looking at, monetary policy, certain types of investments. And obviously our inner circle, the investor syndicate, the goal is to have different experts on our panel where we can really analyze what's going on with the market and what to expect moving forward. I guess the first question, man, is no one really knows, right? But what do you speculate coming out of this meeting with the Fed?
Yeah, absolutely. I appreciate that intro too, man. That's awesome. I would definitely consider myself a strategic thinker and one that likes to humble himself and listen to people like you and other people in the industry and really understand more about it, right? Unfortunately, nobody has the magic globe to understand exactly what's going to happen, but sometimes it just takes a little common sense.
Yeah.
Right. And as, in my opinion, and what, some people that I reach out to or talk to and discuss things is, we could be looking at a bear market depending on what the Fed does, because if the Fed gets to a point where they're going to stop printing money, it's going to create a major issue.
Yeah.
And we'll get into maybe more of the details behind that as it pertains to how the Fed has been controlling the market with printing money and stimulus packages and things like that. At some point too, I like to, maybe even discuss a little bit about how the current state transitions into the real estate market, which in my opinion is the hottest market right now.
Yeah. And a safe investment because when you're stepping into an inflationary scenario, right, commodities and hard assets like real estate are the safest bet, right? Because it's a real physical asset.
And even behind that, there's a huge vacuum, in my opinion, of real estate inventory that we haven't even seen yet, right? Because there's a lot of people that have this major issue that they're running up against of, hey, I could sell my house right now, but where am I going to move?
Yeah.
So how are we going to monetize that? That's where you find yourself still, living at home with your mom versus living in a high rise or a really nice single family home is the decision you make right now and how you can monetize that. So what are we coming up against? If the Fed stops printing money, we all know we're heading into a major issue as it pertains to inflation, right? They're not going to be able to stop inflation. It's going to happen.
It's inevitable.
It's
right?
inevitable. Yeah.
You can't. Every action there's an equal or greater reaction.
Correct.
Right? Everything in the universe. So all of this money that's being printed, really for nothing, right? And when you think about it, money's an illusion, right? It's a faith-based system. There's no monetary backing. We've been off of the gold standard since the 70s, right? So it really is just a faith-based system. So the more money that you print and push into the economy, to make matters worse, no one wants to work, right? There's no output for the money that's being input into the economy, which is it's a cannonball waiting to happen, man, just waiting to explode.
So how do you think that the money is valued? Why does money have intrinsic value?
Money has intrinsic value because we've been told it does.
Exactly.
Right?
Yeah. The only reason it has intrinsic value is because the government tells us.
Because the government tells us, right? And they control it. They can print as much as they want, or they can pull it back, right? Yeah. So it's a value that coming out of the industrial age, consumers or cogs that were working in the machine, right? Working for their system. You're happy working for your wages, right? And it's been accepted through society, through programming, that it has value, right? Which I get there's complex equations that I far past
Oh,
my
yeah.
understanding, right? And there's a needed structure to a monetary system, right? But with that structure also comes a level of control.
Mm-hmm.
So it's a great way to control consumers, control the way that we act, what we believe, right?
Mm-hmm. Oh, you're right. Yeah, you're absolutely right. I mean, if you think about it like this, I'm going to use this marker, and if we're at a point where we're in a really interesting scenario. So this is a growth stock chart, and this is kind of a 40-year period. We'll put that there, and we'll just call this Disney. I think Disney's a good one. So Disney was once here, and right, it goes up, right, and Disney continually grows in value. And by no means am I a certified or investor that can that can really speak to a licensed investor. Let me say
Yeah,
that.
a financial analyst
Yes.
or an advisor. All this is just us common discussion coming together, racking
Common
our
sense.
brains, watching the market
Mhm.
and exploring what's happening.
Exactly. So like let's just say back 40 years ago, Disney was worth, let's say, $15 a share. And it may have split a couple times, but we're just going to do this to keep it simple, right? And let's just say it's trading for 150 now, so which is 10 times what the value was. So this company has grown 10 times. I'm not saying that that's factual. I don't know the exact numbers of Disney, but over the course of that period of time, let's say in this scenario, it's grown 10 times over the last 40 years. The main reason behind that has a lot to do with inflation, right? The value of the dollar was not worth 40 years ago what it is worth today, right? It's worth
Right.
more, or worth less, right? So the value of the dollar doesn't go quite as far. So a lot of the recovery that you're seeing here in this scenario has a lot to do with inflation. Obviously, it has a lot to do with some other dynamics of the business, but a big portion of it has a lot to do with inflation. Now, inflation's not a good thing for our market, and we're currently, what we're experiencing now is we're going to see a major pullback. But once we see that major pullback, do you have a eraser for this?
Yeah.
Perfect. So once we see a major pullback in this market, so so let's just look at it over the last 2 years. So, and we're looking at I want to talk about two things. I want to talk about growth stocks, and I want to talk about value stocks. All right. So the growth stocks have been on a trend up, and this may not be exactly accurate in terms of scale, but there was a little dip here around September, I believe, and then it's back up over here, and it's starting to trend down again. So prior to the pandemic, actually, you know what? This is not accurate because if we're doing 2 year, there was a dip here. So that was the dip during the pandemic. And then
Dip and it shot up.
Yeah, it shot
right?
up. The main reason that it shot up, and this is factual stuff you can look online, was because of the S&P 500. And a lot of the companies that make up the S&P 500 are your top 500 companies. A lot of those, or for example, Tesla's now in there. You have Apple, right? Amazon, Facebook, which is now Meta, right? Those, now that we were always staying at home, those people, these major growth stocks took a major ramp up in value because people were home, right?
Online shopping,
Online shopping,
browsing your phone, social media, not being out, supporting local businesses as much.
Yep.
It's just all online digital companies.
Yep, exactly. And what you're going to see, in my opinion, is that we're going to see a major decrease into a bearish market in this area, the S&P 500, which is going to impact the market greatly. So, and a lot of these areas right here are controlled by, who do you think? Top 1%, right?
Mm-hmm.
So the top 1% knows this, right? They control the world. The top 1% runs the world. So they know we're going to go into a bearish market. They're going to wait to the right time, and then you're going to see
Pull out.
Yep. You're going to see a major rug pull, right? So you're going to see a huge dip in the overall market in the growth stocks. So you're going to see a big dip. It's going to go fast. And the dip's going to be bigger, in my opinion, bigger than what we saw during the pandemic. And it's going to be a longer recovery.
Yep.
Now, there is some good news behind this. So, value stocks, however, had a dip during the pandemic, but they have not grown at the same rate as the growth stocks, right? So this line is going to be the value stocks, and this line right here, similar to that one, is the growth stocks, right? And that's what we're going to see a big dip in the most. You're still going to see probably a little dip in the value stocks, but not quite as big as you saw in the growth stocks, which is going to impact the overall market. But when you see that dip, my opinion from a growth investment perspective, again, I'm not licensed, but I would say you really need to focus on your value stocks if you want to see a solid return.
Or crypto.
Or crypto.
Metaverse.
However,
NFTs. Crypto may pull back in that same time as well. But we're seeing a huge pump into meta, man.
Oh, yeah.
Any metaverse land is doubled, tripled, quadrupled over the past month. It's insane. Big companies are starting to flock the metaverse.
Oh, no doubt about that. And so I was going to mention that too. So, and I'll just call this real world. I don't know. These are my recommendations for long-term investment strategy. And you have to have, for all these, you have to have cash on hand.
Yep.
And I'll go through them. So mentioning the value stocks, right? It's very, very important. There's a lot of value stocks out there. Berkshire Hathaway even has an ETF of those, which may even be good long term. But there's a lot of value stocks out there that could have some solid intrinsic value. Wells Fargo, one of them, which haven't seen a lot of uptick. The meme stocks, for example, are the ones you really want to stay away from right now.
Yeah.
AMC's Avis jumped 3 times in a day, I think. It's crazy.
Highly volatile, right?
Very
but
volatile.
Sometimes you see quick yields with it, right? But the play with some of those memes is learning how to time the market right, where you can cash out towards the top before it tanks, right?
Right.
Highly volatile.
Very volatile. And you just got to be careful there from a investment strategy perspective. If you're diversified, play in it, that's fine. It's just like sports betting. But in my opinion, just if the Fed does for some reason not pump any more money into the market, we're going into a bearish market. It's inevitable because they're going to have to increase interest rates, which is going to do that. So you have your value stocks, which when the dip happens, those are good investments because they're not going to dip as much, but they will have. I feel will have longer. We'll have a quicker recovery. A longer term investment. It's crypto with intrinsic value. It's very important. So crypto is a great space to be in, but what top economists are saying is that only 1% of all the crypto out there is going to survive the bearish market. So there's a lot of coins out there that don't really have good projects behind them or good intrinsic value. In my opinion, those are going to really struggle as it pertains to a long-term investment strategy.
Yeah.
So, and then real estate, as you mentioned in the meta, not NFTs in my opinion, but more of meta land, and then real estate, which there's a lot. This is my favorite investment right now. 100%.
Yeah.
If I had to put anything into the market right now, that's the only thing that I have a lot of faith in.
Digital real estate and physical real estate.
Yep.
One of the two, right? So let's take a quick look at this New York Times article titled "The Fed Meets Amid Faster Inflation and Prepares to React." Right? So from an investment standpoint, we're watching this stuff, right? You're paying attention, you're aware of news, things that are being updated in the market, because that's going to give you a good indication of what to expect in the upcoming months, years, and so on, right? So it's kind of just really overviewing this article, right? Federal Reserve officials meeting together, they're worried about rising costs and buoyed by a healing labor market, right? All this pretty heavy result of COVID, right? Shutting down the entire economy for half a year or more, right? Really, it's been like a struggle, a battle between small business and like government, man.
Oh,
Like
100%.
clashing back and forth, right? And it really is a disaster. Right? A lot of people going out of business, but all the money that's been printed as relief, right? COVID relief bills. It's really kind of just, again, it's like it's a faith-based system, right? But it's just been flooded into the market to try to kick the can down the road long enough for these officials to get a better game plan in place on how they're going to recover. So anyways, a big deal. Big deal happening today, taking place in 2 hours, right? 2 o'clock. Right here it says officials took their first step toward weaning the economy, right? Pulling back in the economy off the central bank's support in November, when they said they would begin to slow a large-scale bond buying program that had been in place since early in the pandemic to keep money flowing around the markets and support the economy. Now, dialing in with this, right, when they say weaning the economy off of this, right, what does that mean to you?
Yeah, absolutely. And this is something that I've been tracking for quite some time, and I feel like it's finally starting to come to a head. Is how the central bank, their relationship to society and what the impact is there. So I relate it to, to your corner store drug dealer, right? And then I relate society to the user. After a while, you're used to cashing in, getting the hit, right, that gives you the dopamine drip or whatever it is that keeps you high and gets you through life. You go back to the drug dealer, you go back to the drug dealer, you go back to the drug dealer, and they keep giving you what you want, right? So and you give them money in return.
It's creating a society that relies on the giver, right? The provider, the source, in this case, of income.
Yep.
Right? But I like how you touched on like the way it's like a dopamine hit. Just like when you browse social media, the way that it's built and created, like people are getting these dopamine hits just going off of how many likes and comments they have, right? And you become so attached, so addicted to that platform, right? Just the way that our minds psychologically are created. Absolutely. But same thing here, it's almost like psychological, I don't want to say warfare, but it's creating a society that's relying on the policies or what's being provided from the powers that be.
Right, yeah. They're relying on the central bank, right? They're relying on the government to continue to keep them in this comfortable state. And I always say...
a lot of people aren't even working right now. Right? Just making more money collecting government money than you would showing up and doing any type of work.
It's true. Yeah, no, I couldn't agree more. And because people like to be comfortable. People love to be comfortable. This is the root of all evil, in my opinion, is comfort. People like to be comfortable. If you can make them comfortable, they'll give away any of their
freedom,
of their freedom they want because they just want to be comfortable. So, reading this article, it literally says the word weaning. So, if for some reason the corner store drug dealer, likes to make this user comfortable, but then that corner store drug dealer says, hey, listen, I'm going to start weaning you off.
So when I hear wean, I think of like weaning a baby off of milk, right? Like
pulling back.
It's mother's milk. So it's,
Yeah, so they're pulling back, right? So how is that user going to like that? Are they going to like being
just like a baby would react. Yeah. There will be tears.
Yeah, because they're not going to be comfortable anymore, right?
Yeah.
So you start to remove people's comfort, then that's going to certainly make a huge impact. It's a very, very simple diagram, but when the central bank starts weaning society off of stimulus packages, then it's going to have a huge impact into the market because those people aren't going to have any money anymore. They're going to have to go out and get jobs, which there is a vacuum for that, but there's going to be a certain period of time, which they're calling for about 6 months or so, where it's going to be a pretty dark time where people aren't going to have any money, especially after Christmas.
Yeah.
People are spending money like crazy right now because they're going into Christmas. They're confident in the Fed because they've been printing money. They're getting drops into their bank accounts for their kids, things like that.
Yeah.
But people don't realize that child tax credit or child tax, whatever it's
Credit.
called. It's actually not free money
Yeah.
because
They're gonna whack you during tax season.
yeah, all you're doing is getting your return early. Yeah, people don't know that. So when they figure that out too, that's gonna be a problem. But if
That and the forbearance.
yeah,
Everyone that put in a forbearance on their mortgage,
Yep.
well, not only did you owe money for the lender, right,
Mhm.
that loan, that note, but you also had property taxes and
Mhm.
insurance that didn't get paid for that year.
yeah,
They got to get paid.
They do.
So guess what happened? They got whacked. They got
Mhm.
doubled down when they lifted the forbearance program. A lot of these people were alarmed because all of a sudden your $1,100 payments now $1,900,
Yep.
right? Because you're doubling up on the property taxes and the insurance. And I don't even think we've started to see that
We have
tsunami yet.
we have not. No, we have definitely not. And so let's talk about forbearance. I think that's a great topic. Because this right here is going to have a lot of impact as it pertains to how we can monetize and make some money in the future. So we got forbearance we want to talk about, and we also want to talk about how inflation relates to supply chain issues, and then we want to talk about overall interest rates as well and where they're going. But first, if we're talking about forbearance, they extended that out 3 months, I believe, right? I think there's a 3-month extension on the forbearance. But
I
after
think it was
that,
a lot longer than that.
Is it?
It was. I thought it was 6 months and then up to like a year. There are some people that didn't pay for a year.
yeah, oh yeah. I'm talking about from this point forward.
Ah.
Yeah, it was well over a year, but
Yeah.
I believe that the forbearance was extended between 3 and 6 months from now.
From now. Okay.
Yeah, from now. And what that's creating is a major issue as it pertains to people paying their mortgages and things like that, right? So what you're going to have in this situation, and again, I'm not an over expert. I just like to do my research and I have some common sense, right?
Yeah.
We don't have an overinflated market as it pertains to property values because we have inflation. This it's not even inflation now. It's called hyperinflation. So we have hyperinflation, which we've never had during this time of a market issue ever. So we're running into a bearish market with inflation. It's not good. It's not good. So the top Fortune 500, top S&P 500 companies are gonna see a pullback. You already seen a lot in Tesla. They're already starting to pull back. You already seen a little bit in Apple. Although that's probably one of the better long-term investments in those growth stocks. But the hyperinflation also is having a major impact as it pertains to property values. So what that means is that you're going to have a lot of people that have equity in their homes. And back in 2008, a lot of people did not have that. They didn't have equity, right? They were upside down on their homes. That's why a lot of mortgages went into foreclosure, right? And this market is not the same. So that's going to create a major the forbearance issue or challenge is going to create a major vacuum as it pertains to long-term investment in real estate, not short-term. I'm talking 7 to 10 year holds. So the only way the Fed is going to combat inflation is to raise interest rates, right? So what's that going to do? It's going to slow down some of the
growth.
Yeah, some of the growth, which is what you want to do, right? So it's going to slow the growth, which is going to increase inventory. And this is a 6 to 12 months from now. I feel like it's going to be in a really good spot, which is going to increase inventory, which is going to also in turn increase consumer confidence. And what I mean, consumer confidence is going to increase their willingness to want to branch out and take a risk and sell their home, right? Which is going to increase that inventory because people are going to see there is an inventory out there. So because the common question is, People want to be comfortable, right? They don't want to live uncomfortably, right?
Yeah.
So nobody's going to sell their home and not have anywhere to go. But people have confidence they can sell their home and have a place to go. Then it's going to have increased inventory, increased consumer confidence, which in turn is going to be very, very good for the real estate market. And
From an investment standpoint.
Because there's inventory out there, which is the main issue that we have now. Now,
Yeah.
what are we overlooking here? This is the biggest moneymaker right now.
Rent increases.
Rent
Across the
has
board.
not caught up yet. So we've seen, I think it's a 40% increase in property values. And don't hold me to that number, but it's a high number.
Crazy.
We all would increase.
Yeah.
This right here has not caught up. It's usually on a 1 to 2 year delay.
And then looking at it from the real estate investment standpoint, right?
Mm-hmm.
We do a lot of business with these big funds, right? Hedge funds are cleaning the market, buying ungodly amounts
Mm-hmm.
of houses, right? Mainly middle class American,
Mm-hmm.
middle class
Single family homes.
Mm-hmm. Now, my speculation, right? My speculation is in the next 7-10 years, majority of middle income housing is going to be mostly corporate owned,
Mm-hmm.
because some of these smart financial minds have access to cheap money. And what's a smart play when you're coming into a hyperinflation scenario? Real estate. So they're just cleaning house, right?
Mm-hmm.
Buying all these single family houses, scooping them up, where I don't want to say home ownership is going to be a thing of the past, but it's going to be a lot more difficult for purchasing a starter home, right? Or your middle class
Mm-hmm.
family to be able to afford a house. They're going to be mostly all corporate owned. It's terrifying, right? And then rent starts to increase. It's just,
Yeah, I mean that's great. So let's say to get a mortgage, and forgive me, I don't spell right. Is that spelled right?
yeah.
So to get a mortgage, you have to have good credit, right?
Mm-hmm.
You got to have some money. Is there
Gotta
anything I'm
have a
missing?
job.
You
Certainly.
got to have a job, right? So you have to have a job, right? And you have to have been on the job for some time, right? So stable job. All right. So going back to our scenario before, where we have an issue right now, and I'll write that again, but where we have an issue right now where people are feeding off the Fed, right? So people are feeding off the Fed right now. So going back to the scenario with the drug dealer thing, if they don't have a course of income, right, continually print money, then where are they going to have the money to buy a house? If they don't have a job, where are they gonna how they going to be able to get proof of mortgage? And then last but not least, most importantly, is if for some reason we're in a market that's up and then it goes down, what happens at that point for them? So because you need money, job, and then credit was the last thing. So I lost my train of thought there. But so once the job market comes down, they don't have a job, they don't have any money, they can't pay their bills, right? So you're seeing a major issue where people are not going to have any money, they're not going to have a job, a stable job, and they're not going to have any credit. So, all right, so let's just say for any normal person, if you don't have those three things, what do you do if you need to live somewhere? Because you want to be comfortable, right? The goal is always comfort, right? Everybody's goal is always comfort. It always gets back to that.
Most people. Right?
Well, everybody likes to be comfortable. Everybody works hard to be comfortable.
True.
They want to be comfortable in general, right? They want to be living on the streets. They don't want to be want to be able to eat when they're hungry.
Yeah.
Right. That's comfort. I want to be comfortable, right? But what do you think? So you question that.
Well,
I'm curious.
yeah.
What you mean by comfort?
I guess where I question it, you're 100% right. People like to be comfortable, right? But there's good comfort and there's bad comfort,
Yes.
right? So when I look at like growth doesn't happen inside of your comfort zone, right? Growth happens when you're moving, you're stretching, right?
Mm-hmm.
You're pushing limits, especially from a business standpoint, right? Like you got to kind of exceed your potential. Well, I don't want to say exceed your potential, but you got to stretch that comfort zone in order to stretch yourself. Like going to the gym, working out, right? You got to stretch your muscles to failure in order to help them grow.
Right.
Now that same principle applies to almost anywhere in life, right? So when I'm looking at it like that, it's like all these you're right, people like to be comfortable,
Yeah,
right?
absolutely.
But you get too comfortable where it's to a point that it becomes laziness and you're not going to work, right? You're getting paid just to freaking live life,
Yep.
living off of the government or other people's productivity. It's just, it's not a good equation.
No, it's not. I completely agree with you there. And like you said, the magic happens. What they say, the magic happens outside your comfort zone. And still, though, if you really quantified, and if I looked in most people's lives, even when the magic happens for them, they're still in somewhat of a comfort zone.
Yeah.
Because people really don't know what struggle is. Nobody that's
America.
alive right now knows what real struggle is.
Yeah.
You know, rationing foods, Holocaust.
We've bred a really entitled society.
Yeah, absolutely.
Right? We didn't. Our parents were in the war, or parents, right?
Mhm.
Coming out of like the World War II, Great Depression. You're right. People don't know what it's like.
No,
to
they
struggle.
don't.
We don't.
They don't. And if people's comforts are challenged, and I'll get to this too, 80-20 rule. I'm an 80-20 rule guy. Because there are exceptions to the rule,
Yeah.
right? But society really falls in this 80% category, and that's all anybody really needs. So if the goal is comfort for people, and they don't have that stimulus, they don't have people taking care of them, right? Then they're going to be in a situation where they're willing to give up any liberties that they have to make sure that they remain comfortable, right?
Which is where socialism comes in, right?
Exactly.
Which really is kind of the power play of the elites.
Yeah.
Would you assume that?
Oh, 100%. And I'll tell you why that's important. So there's three things that, and I want to get back to and this is going to land home this point here. There's three things that motivate people, right? So you have power, you have money, and you got sex. And that's all. And that's a lot what motivates a lot of these elite. So socialism is going to be monetized in one of those three ways, if not all three of those ways. So back to the point when it comes to real estate. So people have issues with money. They don't have it. They got issues with credit. They don't have a stable job. And they need to live somewhere because they want to be comfortable. Nobody wants to live on the street. So
what's the big buzzword with liberal policies in office? Affordable housing.
Yep.
What does affordable housing even mean? The way that I understand it and see it from the outside perspective, it's building these high-rise apartment buildings, right? So you can institutionalize, you can control more people, you can control what they watch, censor their media, internet, right?
Oh, absolutely.
But keep them all in one place, right? It's easy to control people that are confined.
Oh, no, 100%. Yeah, I mean, there's so many different ways to control people. But in this type of scenario, we have somebody that doesn't have money, doesn't have good credit, doesn't have a stable job. They're not going to be able to buy a house. So what are they going to do? They're going to rent, right? And again, like I mentioned before, the rent prices have not even gotten to the point where they're catching up with the increase in overall value. So at some point that's going to catch up. So rent right now is on the increase. And then you add, just for that reason alone, then you add inflation to it. There's double reasons why rent's going to go up, because the value of money is not going to be there. So what does that mean? So that's creating a huge vacuum for that's going to create a huge vacuum for people that are looking to invest, right? And so that's where that long-term hold comes in play. And it could be anything, right? It could be single family, which in my opinion is the best investment because of the demand. There's a lot of people that want to buy single family homes. Multifamily units, which I think you mentioned before, and that can go in a couple different areas. My favorite area is a duplex. You know, we'll want to rent one side, and then we'll pay for the other, right?
Yeah.
So duplex is great. Condos are good too, because there's going to be a lot of people that are, like you just mentioned, that are going to be stacked up together, and low maintenance, lazy lifestyle, right?
Mm-hmm.
We can get into a whole different subject about that. Condos are going to be really good too, as it pertains to long-term purchases. It's not. I just don't feel like it's going to have as much of an upside from a long-term investment perspective as a single-family home, but still a great opportunity to get in at a good price, at a good price point. So, in my opinion, monetizing rent is going to be the play of the future, because once socialism does become somewhat of a thing, which that seems to be the path in which we're headed, then it's going to support that as well.
Until property taxes increase to a point where it almost doesn't even make sense.
Yeah, I agree with that.
Because
but what are you going to do at that point?
You look at places like up north, New York, right,
Mm-hmm.
where property taxes are like 10, 20 grand a year,
Mm-hmm.
right? And it almost doesn't make sense to invest in those crazy areas because you don't get an ROI usually when it comes to like your return on investment.
Yeah, but you can also increase rent. So like right now, I think the industry average is $1,300 a month, and that's still 1 to 2 years old.
Yeah.
You know, so just like any business, you're going to increase rent. So if you're renting right now, the best thing you could do is to secure a lease as long as you can at the current valuation. If you're an investor, then buying and holding is going to pay off in the long term. And you can adjust as property values increase, but you got to realize is what's the main reason why we're in this scenario you just touched on it just a minute ago, where this top 1% are doing what?
Fighting for control.
Right. And they're acquiring all these multifamily units and single family homes.
Cleaning the market.
So we all would agree, everybody here, everybody that's in this building, everybody that's listening would agree that the top 1% have the control. It's just math,
100%.
right?
Yeah.
So as it pertains to, long-term costs, if the top 1% is doing X things, right? They're getting into crypto, they're getting into NFTs or the meta, they're getting into real estate, then they're going to protect themselves. They're going to hedge themselves against things where that long-term investment is just not going to be a good idea.
Yeah.
So yes, a lot of really interesting things there. So we're definitely into a situation where, and I'm sorry if I'm talking too much.
No, you're good.
We're definitely in a situation where interest rates are going up. They just are, right? To fight inflation. It's standard economics. And then we're going to an issue where we're in a current state where supply chain issues are still a major problem. We just had so for example, lumber was at its highest point, right? And then it went down, and then now it's back up again.
Yeah.
So, which is driving land costs up, which is driving, new build costs up.
Do you see a lot of that being by design, like the supply chain issues?
Yeah, I mean that's where I kind of get into a gray area in my mind. I feel like there's supply chain issues everywhere right now. If I had a ball of into the future and I could see, I would love that, because I think we're going to look back in about a decade and see that it was all part of the plan.
Yeah. All manipulated at some level, right?
Mm-hmm. Yeah, it's a power play, because again, the rich get richer, right?
Mm-hmm.
Before the pandemic, and I may be wrong by 1 or 2, but we had 3, maybe 4 billionaires, or 100 billionaires. I'm sorry. So that's 100 billion plus.
Mm-hmm.
Now I believe we have close to 13 or 14, right?
It's multiplied.
So you think about it, just in 1 year, we had almost, a 400% increase in 100 billionaires. Why is that? Was that part of the plan? We won't know, but all you can look at and see is that into the past to predict what the future is going to look like.
Yeah.
That's my opinion there. So I do agree. I do believe that the supply chain issues we're having now is creating a major vacuum in the middle class. So you got your bottom 1%, you got your top 1% up here, and then you have a lot of this right here, which is the middle class. I feel like what we're doing these days is we're shifting to a point where this middle class is just not going to be there anymore, right? We're going to have a very, very small middle class, which is like every other socialist country in this world.
Yeah.
Most countries.
Look at Venezuela.
Yeah.
Socialism completely that was one of the best economies in the world.
Mm-hmm.
Completely destroyed it.
Yep. And if you've ever visited a country like that has no middle class, it's sad, man. I was in Brazil, Sao Paulo, and they have these huge walls, 20, 30-foot walls around mansions, and they have glass broken on the top and razor wire so people can't get in. Right outside, they have families that live in boxes they're actually made from signs. Like they'd break a sign and then there was wood and they'd make a home out of it and they'd live in it. And then if they were connected enough, they could get into these areas where they were subsidized by the government, which are dirt floor and four walls, right? And the purpose I was there was we wanted to create and mind you, this was over a decade ago. It's gotten worse. We wanted to create like a vacation Bible school for the kids in that area because a lot of them would default to prostitution because their parents needed money.
Yeah.
And they could make money on their child, sex trafficking. And that was this is over a decade ago. So we wanted to create a place for them, a safe place for them to go to be able to find Jesus and to be able to be safe, right? So what just blew my mind is that you have these super rich people and then people living right outside their walls, kids in boxes, and that's what socialism does. That's what eliminating a free market does. That's what creating, issues where the rich get richer and the poor get poorer because they don't have a job, they don't have money, they don't have credit, right?
Yeah.
So it makes them dependent on the government and dependent on the top 1%, which goes back to my point. What do the rich want, right? They want power, they want money, they want sex. That's the only.
The crazy thing is people don't see it. I mean, many people do. You and I are paying attention to what's going on, right? But a lot of people we're comfortable, right? A lot of people are comfortable. They have no freaking idea.
Nope.
No idea.
Yeah, and they're going to be in for a rude awakening, and you're either going to find yourself on the backside of that, where you're dependent on someone, or you're going to find yourself in a strong power position where you can use your influence to do the right thing and take care of people.
Yeah.
Which is what our group's trying to do. Is we're trying to get ahead of this using our minds to be able to do that. And I'm not smart enough to do it.
Yeah.
You're not smart enough to do it.
Power in numbers, though.
Exactly. Like so. One of my favorite quotes is, "Not one of us is as good as all of us." Right.
Yeah.
Not one of us is as good as all of us. So what our group's about is pulling people together and making one mind on the same path, so that we're able to use our strengths to be able to grow this thing and to be able to push against the top 1% that's trying to push us into the out of the middle class.
Yeah. Yeah. Power in numbers, man. That's the mastermind principle for anyone that's read Think and Grow Rich, right?
Mm-hmm.
And it's almost biblical. When two or more are gathered, a third mind comes into the mix, right?
Mm-hmm.
God is present, and that's power. Most people don't understand that. You never experience it until you're immersed in that type of a community environment, right? But you bring your minds together, right? Because we all have different skill sets, different innate abilities, different strengths, different insights. And when you come together and you bring those strengths, right, you create a unit, right? It's like a fortified city. All these different people, right, sitting around the table, right? You got your freaking crypto enthusiast and your real estate guy and your lender, whoever, right? But you're all adding to the greater whole, where we come together, we create a powerhouse team, right? But knowledge, I should say application of knowledge, right? The application of knowledge is power. And that's just coming together with your core people, right? And we're not always right? We're not, by far not financial analysts, right? But we watch what's happening, watching the markets, paying attention to the news, and creating a good game plan for how we're going to combat whatever comes next.
Right. Yeah, absolutely. Couldn't agree more.
Love it, dude. That was a deep dive.
Yeah.
I enjoyed that conversation.
Yeah, I did too, man. I did too. There's a lot of nuggets stuck in my head of conversations I've had with people, and discussions are fun.
Yeah.
Yeah, because it helps us understand maybe what we're going into. The only people that have the crystal ball is the top 1%. They're the ones that knows what's going to happen because they're in control of it, and they're going to get rich because of it. And I think a lot of us are going to be holding the bag for them. It's not going to be pretty. I think 2022 is going to be unlike anything we've ever seen.
Blood
before.
in the streets, very heavy.
It will be, yeah. But if you play it right, you could increase your net worth by a lot.
Yeah, yeah.
Absolutely. And this is the time to get ahead of it. This is the time to get ahead of it.
Yep.
There's a lot of moving parts right now. I feel like this NFT space and this meta space is like the internet before it came, right? Back in the late 90s, whenever people were talking about the internet, and the internet couldn't exist without Cisco. That was what they said. That was not true, right? So being ahead of this now, rolling into what could be the future, is going to be key, right? And right now, just there's no way to get through it as somebody like you and I without having a group of people together. There's just no way to do it.
Yeah.
Because we're just not powerful enough as individuals. We're not smart enough as individuals. Even the top 1% is not smart enough. They have people that advise them, right?
Yep.
So what we're trying to do is what we've done is we're trying to create a group of people that can somehow combat that, because this is where the war is being fought. Where 200 years ago it was being fought with weapons, right?
Mm-hmm.
The war today is being fought in the financial markets and in the courtrooms. That's your true warriors.
Yeah.
Those you can't fight this war with firearms. You can't fight this war with violence. The only way you can fight this war is, like I mentioned, is with people and with legislation and courtrooms.
That's heavy duty.
Yeah.
Yeah, that's
I'm a heavy
true.
duty thinker, man. That's all I do is think. I don't stop.
No, I mean, I see it. Perfect example, just looking at the last elections, right? Clearly there was a power struggle, right? And the picture that we saw, right, portrayed through the media is one-sided, right? The media is controlled by the 1%, by the powers that be, right? So if you watch the news, obviously your mind's going to be manipulated in one shape or form. Not saying it's good or bad. Obviously, we know what we believe, Oh,
but 100%.
It's just it blows my mind, man. Just seeing like it was a clash, right? Freaking power just coming together, and sensory, right? Social media canceling people's accounts, independent fact checkers coming in. Like, you go to China, their internet, right? They can only see what the government allows them to see.
Oh,
they don't have
100%.
a source of real information, right?
100%.
It's the information that's force fed them, right? And that's the whole system's by design. America being the last standing free country, right, where there's opportunity, no matter what class you're born into, we all have an equal playing field, right, to get out of that.
100%.
I mean, I say equal. Some people have access to greater education,
100%, and
better
generational
food
wealth
and stuff. But at the same time, with the internet, like, you have at your fingertips opportunities to create whatever type of life you want, right? If you're willing to do the work.
Oh, 100%. And you and I both have a history of, from what I understand about your history, is that generational wealth has not helped us at all. We didn't have any. So what we've built so far, and the people that we network with and friends with, people that have built their own. They use the skills that God gave them, whatever they may be, to try to get them out of that point. Yeah, people do have an advantage for sure, overall, but it doesn't mean that you have to give up.
Yeah.
And as you talk about control, and you talk about other countries and things like that, what the government, in my opinion, is trying to stop more than anything is chaos, right? If they lose control, equaling chaos, in society, then that's going to create a situation where they're not going to be able to implement the plans that they have in place. Chaos is what they don't want. So how do you control chaos? Control the information. It's plain and simple. It's it's basic sociology, right? So you control the information.
But at the same, so piggybacking on that,
Yeah.
but then I also think that they've also created chaos on purpose as well.
Yeah,
Like
so
you look at
control
the
chaos. Is
yeah,
different.
look at the way that COVID was handled, right? And like modern day racism, it's like it's a psychological thing, right?
Mhm.
Like the BLM, right, was just an organized plan to create division, right? Division comes chaos, right? But that whole thing, the way that it was laid out, it's just
Yeah,
chaos.
chaos also, unorganized chaos is what they don't want. Control chaos is put in place by them to achieve an objective. The objective of dipping the market into almost nothing during the pandemic, that was a chaos. It was created
So they
to
could
be
load
able-
their bags up and double up on their holdings.
400% increase in 100 billionaires.
Yeah.
That's control chaos. Control chaos is a way of controlling, but uncontrolled chaos, which is where the free people, right, the people that are warriors, that are ones fighting in the streets for the right, for the freedoms, and to be able to have a future for our children. Those are the ones that they're scared of, right? They're scared of that person that's willing to sacrifice their comfort to be able to impact the potential future of our country, right? That's the warriors that we're in place now, and the government needs to control them, because if they don't, then that chaos will ensue, and they will lose control. And if they lose control, then they can't achieve their objective. So, in my opinion, that's one of the big things right now. That and like I mentioned before, how do you control that? You control information, right?
Yeah.
So that's why the biggest campaigns of information over the last 15, 20 years, Facebook, Twitter, all those areas, it's kind of interesting how, and Instagram and all those different social media outlets, it's very interesting how they knew about this 10, 15 years ago, right? Let's funnel everybody into one area of communication so that we can control it. It's not hard, right? It's not hard. And what's the other mecca of information is newspapers. It's very interesting how over a decade ago or more, a lot of the news outlets and different areas where you get information on the internet or in print is owned by less than, I think, 10 companies. So pushing everybody into a funnel of information that you can control. And if you can control that, then you can control the chaos. That's why there's such a bipolar area of disinformation. You have your friends that are over here that are like, believe this, and you have your friends over here that believe this, and there's just no middle ground. There's no compromise. Why is that? It's on purpose.
I mean, yeah, it's on purpose. It's mixed information, right? That one source says one thing, one's another. Like there's no true north. There's no true source of what to know, what's right, what's wrong, what's this, what's that, right? Like it's an ecosystem of information, right? That it doesn't even matter if it's right or wrong anymore. It exists.
Scary.
And a lot of people just, again, we accept it as fact.
Yep. If you hear it on the internet, it's true, right? I mean, my mom always just said, don't believe what you read on the internet, and don't ride with strangers. But literally, these days, we summon people from the internet that picks us up, and then we ride with strangers with Uber and Lyft. It's kind of crazy how society has changed from, never ride with strangers and never, believe what you see on the internet. So it's interesting, this culture shift.
Things are changing quick, right? But again, find your group, find your tribe, make sure that your people are always stretching to end up on the other side of that comfort zone where growth does not exist, right? Find your circle, guys, run with it, and stay consistent.
Absolutely. I appreciate you bringing me out here today.
Yeah, bro.
Chat through this. This is awesome. Good stuff, and it's great to be a part of this awesome group.
Absolutely, man.
Man.
Much more to come.
Yep. Absolutely.